What's up everyone? Casey here. In our last section, we explained what a directional bias is and how to spot your directional bias. Excuse me. Now today, we are taking it a step deeper. Our topic for today is market structure shifts. And under market structure shifts, we are going to explain what a valid market structure shift is and what an invalid market structure shift is. And under valid market structure shifts, we have what we call a fake out. Alright, so this class will be brief. Let's head straight into what we have today. So market structure. What is market structure? We all know what our market structure is, right? This is not a beginner's class. We all know what our market structure is. It's either a trending market, an uptrending market, alright, making series of higher highs and higher lows, or the other way around, right? A downtrend. Alright, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. This is two types of structure, two types of market structure. Alright, see, what separates a good trader from a consistent one is understanding structure, because this is where momentum changes, direction flips, and opportunities are born. Now listen attentively. We have three types of market structure. Two types of market structure: the trending market and the ranging market. And under the trending market, we have uptrend and downtrend. Right? Now, whenever we have an uptrend, whenever we see an uptrend, we buy, right? And if we see a downtrend, we sell. Now, how do you know when these trends are coming to an end? How do you know when these trends are coming to an end? Now, we're explaining invalid market structure. When to know that this uptrend is now invalid, or maybe it's still valid. Because in the video we all watched about the mentorship, we all learned that if an uptrend, a market, takes out this low, then it's a market structure shift, right? Or if a downtrend takes out this high, then it's a market structure shift. However, in some cases, these are not the real deal, right? These are just markets trying to take out internal liquidities to continue its trends, because it's possible to move down and then continue, right? After taking out this inducement, here is a break of structure inducement, then tap into another block and continue its trends. Or this one, hold on, or this one, moving down after taking out this inducement, then the other block here, and it continues the downtrend. How do we know when to actually expect a market structure shift? How do we know when to expect a market structure shift? Now, that is where our directional bias comes in. We've talked about directional bias, and I believe by now you all can now spot your directional bias correctly. Rules. Let me list the rules. The rules for identifying a valid market structure shift. A valid market structure shift. Or rather, let me say invalid. We treat the valid market structure shifts. Whenever a market is in an uptrend, whenever a market is in an uptrend or downtrend, you don't just expect a structure shift. No, you don't expect the market to shift structure for nothing. You don't expect the structure shift for nothing. The structures, your lower time frame structures, shifts only when it meets a higher time frame supply or demand zone. It shifts only when it meets a higher time frame supply or demand zone. Example, this is a daily, weekly, monthly, or 4 hours order block. D1, W1, H4, or even monthly, 1 month. Alright, same thing with this. Now you all know that these time frames that I listed here is what we use as our bias time frame. I explained it in the last video. I said that the daily, weekly, H4, or monthly can be your bias. Anything less than that is not your bias time frame. So whenever a market is moving, the 30 minutes charts, 1 hour charts, 15 minutes charts is moving, it's trending up or down, you don't just expect it to shift a structure without meeting any of these bias, order block or breaker block. That is what I also call a supply or demand zone. Higher time frame supply or demand zone, that's what other people call it, but I call it my bias order block or breaker block. That should be the bias point of interest, right? So if this trend shifts from this place now, I won't take this as a market structure shift. I will take it as market just taking out this internal low, which is our inducement, to trigger from a point of interest here and continue its bites. Same thing with the MSS, same thing with the downtrend. If this market structure shifts without tapping any of this bias POI shifts, I will only take it as a liquidity grab, taking out the inducement to continue its sales. All right, these are invalid market structure shifts or change of character. These are invalid market structure shifts or change of character. These two things that I explained are invalid. They are invalid. Your market structure shifts will only be valid whenever your trending market meets a bias POI, which is higher time frame supply or demand. If this uptrend moves into one of these other blocks, is either the daily, weekly, H4, monthly, or higher, right? Whenever it moves into this other block or breaker block, any supply or demand zone, which is higher time frame, a higher time frame supply or demand zone, then you look out for a structure shift. If this happens after meeting any of these other block or breaker blocks, then I'll consider this a valid market structure shift. What I want to see is the market pull back, giving us our inducements, then triggers, and boom, head down. All right, same thing with a downtrend. Market moves, then taps into the higher time frame supply or demand zone, gives us an MSS inducement, then boom. These are the valid market structure shifts. These are the valid market structure shifts. Whenever the market meets higher time frame supply or demand zone, take note, if it meets higher time frame supply or demand zone, it could be your order block, your breaker block, your support and resistance, your fair value gap, but me, I only use the order block and the breaker blocks. All right, these are the only valid market structure shifts. However, if this is a 4 hours or a daily time frame, if this is a 4 hours or a daily time frame, right, hold on, if it is any of these time frames, our higher time frame, our bias time frames, if it is any of our bias time frames, the markets can be trending up, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, then boom, market structure shifts, taking out this low. Whenever the market does this in a higher time frame and the bias time frame, what you should do is wait out for the market, look for the reaction, step out, sit out, and watch what the market is about to do. If it does this, creates your inducement, then taps into another block or a breaker block, then only then you can sell. All right, if it taps into your breaker blocks or your other blocks, your point of interest on the bias time frames only, take note, on the bias time frames only, if it taps into your bias time frames, then you can go down to your lower time frames, your 1 hour, 30 minutes, 15 minutes, to look for another market structure shift here, just to ride the trade all the way down to the take profit. All right, let me show you an example on gold, what I'm trying to say. Okay, gold is not here. AU USD. Open that. This is gold, the daily. Look at what I'm waiting for on gold. Let me delete all this a minute. Look at gold. Initially, gold has been in an uptrend, right? It has been in an uptrend. We all know that gold is in an uptrend, making series of higher highs. Making series of higher highs and higher lows, higher highs, 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 higher lows, higher high. Then what happened here? A lower low, right? A lower low. This is exactly what I was explaining. This is the daily time frame on gold, and this is our bias time frame. So these market structure shifts that just happened here can be valid if gold should tap into this this demand zone, if only gold taps into this demand zone, then we'll take this as a valid market structure shift, because this is the daily time frame and it is one of our bias time frames. All right, so on gold, we want to see something like this. Want to see something like this. Want to see gold tap into this other block. Then we go down to the lower time frame, either the daily, either the 1 hour 30 minutes or the 15 minutes. So this is the 1 hour. So if gold does something like this, if gold moves from here, creating its structures, then taps into this daily order block, and we expect gold to move down, giving us another market structure shift on the lower time frame, the inducements. Then I'll pick my trade from any lower time frame order block or breaker block to ride these cells. All right, so this is another model of valid market structure shift. So from what I explained, I said that a valid market structure shift is only expected to happen whenever price taps into our buyer's point of interest. Valid market structure shifts are only expected to happen whenever the price taps into any of our buyers' point of interest, which is higher time frame supply or demand, right? Or rather, whenever a higher time frame shifts in structure, gives us our inducement, then taps into any of our valid points of interest, then we can also consider it as a valid market structure shift. So now we have explained invalid market structure shifts, valid market structure shifts. Let's get down to fake out. Remember, invalid market structure shifts only happens in lower time frame. Whenever a market structure shift happens in lower time frame without tapping into our buyers' points of interest, then it is invalid. It might just be a liquidity grab to continue its initial trend. All right, now let's talk about fake out. Fake outs. When you hear fake out, what comes into your mind? Whenever you hear fake out, what comes to your mind? All right, let's use gold. It happens on gold a lot. You know, some pairs, their behaviors are not the same. GBP USD might be behaving this way, XAU USD might be behaving the other way. But that's why it is very important to backtest any pair before you take a trade on it. Backtest on different pairs and see how it behaves before you take a trade on it. Like on XAU USD, this is what happens. Let me give an example before we go into the charts. So on gold, this is what happens. Let's say that let's say that this is our 15 minutes time frame. let's say that this is our 15 minutes time frame. All right, this layout, this blue layout is our 15 minutes time frame, which is a lower time frame, and this up here is our bias point of interest, which we expect markets to trade into to give us a valid market structure shift. Right now, this is what usually happens on gold. I will show you the chart example. If gold is moving up or down, if gold is moving up, all right, and it taps, okay, hold on, and it taps into our bias point of interest, watch out, gold will do something. Remember, look at it, will tap slightly into our bias point of interest, slightly. It won't go deep, just slightly into our bias point of interest. Then changing character. Whenever you see this, after it taps into our bias point of interest, you say, oh, this is a valid market structure shift, right? Then gold will go boom, take this high out, tapping properly, then comes to give a valid market structure shift. Then the inducement, and boom, sorry, and boom. Did you get what I just did? Look, let me give the example again. Whenever you see gold, tap into our bias point of interest slightly, then gives a market structure shift. Do not take the first trade after this market structure shift. Wait for gold to manipulate. I call this a fake out. It will fake out. Wait for gold to fake these people out. The people that entered from here, their stop loss will be above this high. Wait for gold to fake them out before giving you a proper market structure shift. This is why newbies say, oh, gold is very hard, don't trade gold as a newbie. But I entered, I backtested, I studied, and I understood how gold behaves. All right, this is how gold moves. Whenever it takes out this MSS, after tapping in slightly, it will fake out this high before going to your direction. And you will be like, oh, he just stopped me out and went to my direction, blah, blah, blah. This is what happens on gold. Unless, if you see gold, do something like this. Because some people will be asking, what if gold continues moving without faking it out? Look. Whenever you see this on gold, taps in slightly, you see your market structure shift, inducement, then it picks from the breakout block and continue. No problem. That's not your trade. It's better not to trade than to lose. Alright? No problem. Then let it move. Wait for another break of structure, double break of structure, inducement. Then pick from another point of interest. It's that simple. But majority of the time, gold will fake you out before it moves. Now let's go into the chart so you see the practical example. Alright, this is not good. Let's use the 4 hours time frame. You see, I've not taken any trade on gold recently. Fuck. Sorry, I've not taken any trade on gold recently because of the uptrend, the rally. I've not seen a clear bias. You know, I said I only trade the SLP bias. I don't trade normal structure bias. That's why. So let's go back to around June, July, August. All right. Let's use this. This is the 4 hours. Let me check if I will see other. Let me see. Let me check if I will see other examples. Check the daily. Check the daily. Okay, nothing to show for it. Alright, let's go to the 4 hours. Let's go to the 4 hours. Let's go to the 4 hours. I'm sorry for the calls, guys. Look, this is a perfect example. Let me delete this. This is a perfect example. See gold. This is our bias time frame. We had our market structure shifts. Gold was initially in an a downtrend. We had our market structure shifts here, inducements. Alright, then this other block. After it tapped into this other block, watch what's happened. Watch what's happened. This was where gold tapped into this other block. This was where it tapped in. Let's mark it out, then go to the lower time frame so I could show you what I was saying. This was where gold tapped into the bias order block. Yeah, let me demarcate it. Now let's go to the 30 minutes. Easy charts. Is our demarcation. Where is our demarcation? Alright, here it goes. So look, okay, 15 minutes. Let's check 15 minutes. Fuck. Oh, I can't see it on the 15 minutes. Let's still use the 30 minutes, but I hope you guys understand what I'm trying to explain. Let's use the 30 minutes. Fake out. I'm trying to explain fake outs on gold. Remember, this is our 4 hours bias order block, right? This is our 4 hours bias order block, and look at when the market tapped into the other block. It slightly tapped into the other block, as you can see. Then it moves up. Here, on the lower time frame, the 15 minutes, 5 minutes, you will see a market structure shift. This here as your inducement. Then you will pick another block from here, and gold moves, boom, taps in properly, and then it started drying up. Can you see that? It faked out this low. Gold tapped here, moved up. After giving little market structure shifts on the lower time frames, it dipped back just to fake out this low, to take people out. Then it starts moving up. Can you see that? Let's check another example on gold. See this fake out, I only experience it a lot on gold. I don't know about other pairs, but I see this a lot on gold. I advise that you just backtest and see how the pairs you want to trade behaves. Alright, so this is another example. Let me demarcate. As you can see, After gold made a market structure shift here, inducement, then tapped into this 4 hours breaker block. Can you see that? Tapped into this 4 hours breaker block. What happened? What happened? Look at where gold tapped. Let's go to the lower time frame. Let's go to the 30 minutes. Here is our demarcation. Yeah, here it is. Here it is. Now watch. Now watch. Beautiful. Look at gold tapped into our buyer's point of interest, then give a market structure shift. Look at taking out this low and this low. People will say, oh, this is a valid market structure shift, right? Because it's tapped into our buyer's point of interest. Then we want to take your trade from this other block. What's happened? Boom. We take you out and then continue with the downtrend. Can you see that? I didn't take any trade here. I just waited for gold to move up, then give me another entry opportunity here, which I took, as you can see. Can you see that? I don't know if I can see another example, but just know that it happens a lot on gold and some other pairs, maybe USD JPY. Yeah, it happens. Let's check USD JPY. I guess it happens on USD JPY. Is USD JPY here? Just study and know the market behavior. Each pair has their own different behaviors. All right. Yeah, it happens on USD JPY. It happens a lot. Look at this one example here. Look at this one example here. Let's mark it out and demarcate. So guys, you just have to backtest and see if the pairs you want to trade happens to do this, so that you don't get faked out all the time. All right, let's go to the 30 minutes. Let's go to the 30 minutes. Right. Remember, this was our 4 hours order block, which is our buyer's order block. Look at what USD JPY did here. Look at what it did here. You can spot it already. It tapped in slightly, moved down, giving us a market structure shift on the 30 minutes time frame. This was our inducement. You want to pick your trade from this point of interest here, and watch what happened. Boom. UJ took you out and continue rallying in your direction, which will be painful. You understand? So guys, do way to backtest. Do way to backtest. Before you trade any pair, before you start trading any pair, backtest. Check their bias. Check if they do fake outs. Alright, check if they do fake outs. So this will be the end of this section, guys. Thank you very much for participating, and let's watch out for our next topic. Alright.